Alphabet, the parent company of Google, YouTube, Android, Chrome, and Waymo, is one of the most powerful companies in the world, and with products used by over 4 billion people. It's basically the backbone of modern internet. When I last visited the company on 25th of April, I said it was a buy at around $160. Now it's grew to be my largest position, and my bank balance thanks me. Since the video, it has grown over 85%. Luckily, I was already an owner before that. So after a couple of years of slower growth and heavy AI investment, Alphabet stock has exploded, climbing over 90% in the past year and now trading around $320. But investors are wondering, is Alphabet finally entering a new era of growth, or is OpenAI going to win the AI race? Let's dig into the company, the numbers, the future, and what Google might be worth today. Overview. The company was created when Google reorganized its businesses under a single parent company called Alphabet. But most people are still referring to the company as Google. Today, Alphabet operates through several major segments. Here is the more simplified version of the segments. Google Services. This includes Search, YouTube, Maps, Gmail, Chrome, Android, Play Store, and all the core consumer products. This segment generates the vast majority of revenue, primarily from advertising. Google Cloud. One of Alphabet's fastest growing businesses, competing with AWS and Microsoft Azure. Cloud has become a major profit engine recently after years of heavy investment. Other bets. This is where Alphabet experiments, like Waymo, self-driving cars, Verily, health tech, and handful of other moonshot projects. These don't make much money but are shown on Alphabet's long-term innovation pipeline. On the macro level, Alphabet's ecosystem is enormous. Google Search has over 90% global market share. Google has the top 2 most visited websites in the world. YouTube has over 2 billion monthly active users. Android runs on over 3 billion devices worldwide. Chrome still dominates desktop and mobile browsing. And Gemini has over 650 million monthly active users. Alphabet has become not just a tech company, but one of the foundational infrastructures of the modern digital economy. Its data, distribution, and network effects makes it extremely difficult to compete with. But let's move on to the financials. Now let's look at the numbers. Right now the forward EPS is sitting around $10.50. The price to sales ratio is around 10. The forward PE ratio is around 29. They are paying a minimal dividend of around 80 cents with the dividend yield of around 0.3%. The short interest is super low at under 1% and market cap is around 3.6 trillion. If you look at the revenue per share, it's basically a staircase moving upward, from about $3.50 back in 2012 to over 31 today. Google rarely grows in explosive spikes. It's more like a snowball rolling downhill. Search, YouTube, cloud usage, Android, and AI. Every piece adds a little bit more every single year. Earnings per share follow the same steady path. EPS went from under $1 a decade ago to more than $10 today, and the line barely dips along the way. Very few companies can maintain a compounding engine this consistent for this long. Free cash flow per share rises in a similar rhythm, and even with Alphabet pouring massive amounts of money into AI chips, data centers, and infrastructure, they are still generating more than enough to cover all of it. Most companies would be bent under the weight of that level of spending. Alphabet barely notices it. Profitability is still elite as well. Operating margins are around 32% and profit margins sit around 32% as well. For a company of this size, margins above 30% put them in extremely rare territory. The heavy AI build-out pulled margins down temporarily, but they have already bounced back, showing just how much pricing power and operational control Alphabet has. And when you look at the returns on capital, the pattern stays the same. Both return on capital and return on equity sits comfortably in the double-digit territory. That tells me that Alphabet doesn't just generate money, it reinvests the money with precision, whether it's cloud, AI, or advertising. When Alphabet puts cash into something, it usually pays off. Overall, I don't have many bad things to say about Google's finances. Future. When I look at Alphabet's future, it starts with the same thing that built the company, search. And the simple truth is, Google search isn't going anywhere. The interface might change, the results might shift, and AI answers will take a bigger role. But the need for people to find information, compare options, and make decisions isn't disappearing. Search just evolves, it doesn't vanish. And Google is the one shaping the evolution. From there, the second pillar is cloud. And this is where Google has been quietly building something incredibly powerful. Google Cloud doesn't get the same hype as AWS and Azure, but the fundamentals are improving fast. Higher margins, growing customers, and deep integration with AI infrastructure. The more companies adopt AI, the more they need scalable compute, storage, and training environments. And Google is positioned right in that flow of demand. And the last pillar is AI. But here's the key point. The money in AI isn't in chatbots. Chatbots are expensive to run, and they don't make enough revenue to pay for themselves. You can already see this happening. Even OpenAI, with millions of paying subscribers, reportedly loses money on every single customer, including the subscribers on average. That means that the business can't fund its own expansion through free cash flow. It needs outside capital constantly. But Google doesn't have that problem, because Google is the only company in the world right now that owns the entire AI stack end to end. They build their own TPU chips, they run their own cloud infrastructure, they develop their own AI models. So unlike OpenAI, Google doesn't have to buy cloud capacity from Oracle or Microsoft. They don't have to buy chips from Nvidia at huge markups. They don't rely on third-party infrastructure to train and deploy anything. Every part of the system, from silicon to servers to data centers to models, is under one roof. And that means Google can scale AI more cheaply, more efficiently, and more profitably than almost anyone else in the world. Their cost structure doesn't explode as usage grows. It actually gets better. In my view, the real winner in the AI race won't be the company with the model that's a little bit smarter than everybody else. It will be the one that can deliver AI at the lowest cost. We are still nowhere near human-level general intelligence. And until that day comes, the game is about efficiency, not tiny performance differences. At least this is my opinion. So when I look at Alphabet's future, I see a company where search keeps evolving, cloud keeps expanding, and AI becomes the engine that ties everything together. And not just as a chatbot, but an entire ecosystem that Google controls from top to bottom. Intrinsic value. So is Google a buy today? Google's forward EPS is around $10.50. The analysts are estimating super high growth in the short term and then slowing down to just high growth. I think there's no doubt that there's going to be growth. I feel the same way as the analysts that the growth is going to continue, but I think it will slow down once the AI hype cools down a bit. Right now it feels like every CEO is trying to put AI onto the office coffee machine just so they can brag that their company uses cutting-edge AI. So I think in a couple of years, the ones with actual use cases are the ones left. Google has grown their revenue around 10 to 15% per year in the last few years, and I feel like after the AI hype is over, they can't expand their margins anymore, so growth would match the revenue growth. But to be conservative, I would assume a growth rate of around 10% for the next 5 years and then 8% for the next 5 years. And as always, I want 12% for my money. Google's forward PE ratio sits around 29. In recent years, it has traded around 20 to 30 times, with a median of 26. For a company who is growing quite fast with good margins but still has tight competition, I think a reasonable conservative PE ratio in the next decade would be around 25. With these numbers, we get an intrinsic value of around $290, which is a little bit lower than it's currently trading. Alphabet remains one of the most important companies in the world, powering billions of devices, dominating search, shaping online advertising, and pushing aggressively into AI and cloud computing. The business is incredibly profitable, extremely resilient, and supported by one of the most strongest balance sheets ever seen. And Google also has a big advantage over OpenAI, its cost. Google can fund itself and also produce everything in-house and not shop elsewhere. But the big question is, will AI amplify Google's dominance or disrupt it? Personally, I like Alphabet a lot, but I'd prefer buying it a slightly cheaper price given the uncertainty around search and massive AI spending cycle, plus the uncertain profits of AI. But I will still classify it as a buy at these levels. I do own Google, but my buy price on average is way lower. At the moment, Google is my biggest ownership in my portfolio, so I don't intend to buy more mainly because of that. But let me know what you think. Is Google's best growth already behind it? Who is going to win, Gemini or OpenAI? Comment below. And also, could you please give this video a like and subscribe if you haven't already. And as always, do not lose money and safe travels. Bye bye.